So we continue with limited companies. We have two types of limited companies. We have the public limited company and the private limited company. But the focus here is private limited companies. So why do we call them private limited companies? We call them private limited companies because these companies are formed by friends and family. They are formed by friends and family. So mostly they are small or medium-sized businesses. Small or medium-sized businesses are formed by friends and family. So here I wrote, private limited companies. These are companies which the sales of shares are between friends and family. So it means the shares will be sold amongst friends and family, and they are mostly SMEs, small, medium-sized businesses. What are their features? Number one, their business name ends in LTD, so it's going to be ABC Ltd, ABC Limited or XYZ Limited. The initial ends with LTD. Do you understand the first point there? The second point, shares can only be transferred privately. So it means we cannot sell shares to the public. It's going to be within friends and family, so it's private. The third one, they are often family businesses, so it's a family business mostly. The next one, the directors are the shareholders and they are part of running the business. Yes? The transfer of shares, right? Because it's a private limited company, shares, they sell shares, but the shares has to be sold between the friends and family, which means it's a private sales of shares. They sell the shares privately. So it means you and your friends could set up the business, not to the public. In as much as I'm not part of your family, I'm not part of your friends, I cannot buy the shares. No, you can. No, selling shares means the owners are restricted. Selling shares doesn't mean you are not selling your. It's different from the business itself. You operate your business, yes, to the public, but the ownership. We're talking about ownership, the status of the business. That's what we're talking about.
Shares not stock.
It's not stock. Yeah, it's not public. It's not public, but the business is public. You can sell to whoever you want to sell to, but the ownership, the status of the business is what we're talking about. So whatever we talk about forms of business, it's simply about the ownership of the business. A sole trader owned by an individual, partnership owned by 2 to 20 people, private limited company owned by friends and family, public limited companies, sales to the public. That means everyone can be part of the shareholders. So whatever we talk about here is simply about the ownership, the status of the business. We call it legal status of the business. Not that you cannot sell you can sell your business, you can sell your products or service to the public, but the ownership is what we're talking about. It's restricted to friends and family, which is private. Is it clear now? And the directors are simply the owners of the business, so they run the business themselves. That's another feature. Any question about that? Any question, please? So what are the benefits of being a private limited company? The first one, shareholders have limited liability. Unlike sole traders or partnership that have unlimited liability, in as much as you are part of the owners of this business, you can only lose your investment, not your personal wealth. That is limited liability. Do you get the first point here? The advantage here is that whatever you have put into the business can be lost, but not your personal wealth. You cannot lose your personal wealth to the business. Do you understand the first advantage here? Unlike a sole trader or partnership, which you cannot separate the identity from the owners. So whatever happens to the business happens to the owner of the business. That's unlimited liability. But here, whatever happens to the business does not affect you personally. Do you get the first point, please? Do you get it, please?
Yes.
2, more capital can be raised through the sales of shares. Unlike a sole trader and partnership, there's limit to the amount of money. Can you be focusing here? There's limited amount of money that you can raise through sales or through sole trader and partnership. But because it is friends and family, that means we can still raise more money than sole trader or partnership. For partnership, it's 2 to 20 people, but for sole trader, there might be more than 20 people because they are friends and family, so they can raise more money than being a partnership. Do you understand the advantage here? More capital can be raised in a private limited company than unlimited liabilities like sole traders and partnership. Do we get the advantage? Yeah. The next one, control over the business cannot be lost to outsiders because it's between friends and family, which means outsiders cannot be part of the owners of the business. So the control, the authority of the business cannot be lost to outsiders, to the public. So if an individual is buying more shares it's going to be a friend or a family. So it's still within you guys. Do you understand the advantage here? Unlike a public limited company can lose ownership to an outsider, because you can't control those who buy the shares in a public limited company. But here you can control it because it's restricted to friends and family. Do you understand what I'm saying or not? For a public limited company, you cannot control the sales of shares. But in a private limited company, you can, because it's restricted to friends and family. The next one, owners may pay less tax. Why would they pay less tax? Because they are small and medium-sized businesses. And mostly, government always wants to encourage small and medium-sized businesses to grow. As a result of that, their taxes are always less. Do you get the point I'm making here? For government wants to encourage small and medium-sized businesses, SMEs. We call them SMEs. Government usually encourage them so that they can grow. As a result of that, the taxes they pay might be less compared to a public limited company, which is an advantage because it means owners will be having more profits to themselves. And the last one, they have higher status when you compare them with a private or with a sole trader or partnership. It's bigger, it has more reputation than a sole trader or partnership. Are you here? Any question about that? Any question, please? So what are the problems or setbacks when you set up a private limited company? The first one, they have to publish their financial information. So whatever their financial statement is, it has to be published, which means the public have to see their financial statement. Not only the public, their competitors will also see it, which means their competitors can measure how big or small they are in terms of what they make. Unlike a sole trader or partnership, they don't have any obligation to show or to publish their financial statements. Do you understand the first problem here? It's a problem here because everyone has access to your financial information.
Why do they have to publish it?
Because it is an obligation based on what you have told the register of companies in your MOA. You already stated that in your MOA that you're going to audit your accounts, and if it's been audited, it has to be publicized. Clear? The second point, they have to meet the setting up cost. The business will not be able to set up without meeting up the cost. And the cost includes whatever the MOA and the AOA are. Whatever amount of money you have to spend, everything has to be stated. So without you having them on ground, you cannot start, the business cannot fly. When I mean fly, it means cannot operate. Is it clear, please? Is it clear or not?
Yes.
The third point, profits have to be shared between more members. In partnership, it's between 20 people. As a sole trader, you only have the profits yourself. But for a private limited company, it means the distribution of the share of profits, the dividends, has to be among a lot of people, which means the return on investment will be lower. Do you get the point or not? When you have more members being part of the owners, the profit made reduces because it has to be distributed among a lot of people, and that reduces the return on investment. Second to the last one, it takes time to transfer shares as all members have to agree. Yes, it's between your friends and family. Still, before a member of the family or friend can transfer the shares, every member has to agree, which might take time. Do you understand the problem here? Unlike a public limited company, nobody controls the sales of shares.
Only the owner.
What?
Only the owner. For public.
For public. No, there are no owners in public limited companies.
Yeah.
For public limited companies, the shares are sold. You don't even know who buys the shares. So that's why most of the time, you will just hear that there's a takeover. Because certain individual is able to convince others to sell their shares to him or her. Do you get the point I'm making here?
Yeah.
For a public limited company, the control of shares cannot be done, which means you can as well lose the control of the business to an unknown person tomorrow. Because that person might have come up with a strategy to buy shares from those that you don't even know. Before you know it, he has a larger stake than what you have. Then he takes over, or she takes over. But in a private limited company, that's an advantage. The sales of shares are controlled. And everybody has to agree before the sales commence. So here, the amount of money that has to be raised is limited compared to public limited companies. Whatever amount of money you have to raise has to be between friends and family. You can't still compare it with a public limited company that can sell large numbers of shares to the public. Do you understand? Any question about private limited company? Thank you.